2 days ago, we called the oil reversal, and it has been tanking since. If you're not surprised, you must be following investing angles. Welcome to Daily Market Waves, where we decode the markets candle by candle, wave by wave, long before the headlines catch on. Today, we ride the follow through of that epic oil call, track silver's textbook ending diagonal, and spotlight copper's 12% drop just 2 days after we sounded the alarm. We'll also give you a sneak peek into SP 500 and Nasdaq before our deep dive in the weekly digest. Heading down under, we'll check in on the ASX monthly moves. And no, the market doesn't rally just because the US drops. We revisit Microsoft. The warning started with the July closure. And Tesla, where the big question is, time to go long or still charging? Plus, Ethereum's monthly roadmap. And if you are wondering about Bitcoin, our master trader Kyle has answers waiting on our private Discord. Markets don't wait, and neither should you. Smash that like, hit the bell, and let's get into it. And today we start with oil. This is the weekly closure, and it is highly unlikely that anything gonna change before the end of the day today in the next 4 hours. The daily candle is very bearish, freshly made 8 by 20 EMA bearish cross. The 2-day frame is also closing bearish, and the weekly frame is a classical falling 3 methods setup. After the red candle, oil formed 3 small green ones. The fourth one tried to form a bottom but was rejected, and right now it is closing below this 64.995 line, which would mean a bearish reversal, bearish continuation on falling 3 methods. And I would say that the move lower is almost guaranteed at this point. Now let's have a look at the calls. So this is something that we discussed with our members on April 2nd. This was the chart, and after this chart, oil successfully lost about 12%. By the way, forming an impulsive wave, which is likely going to be just a wave 1 or wave A of a bigger correction. And we will discuss this once we have a closure, once we have all the prints, and obviously we will include oil in our weekly digest, which will be posted on Saturday or Sunday. Speaking about some different calls, even earlier. So this one was shared with our subscribers on March 26 as an early reminder of what can happen. This was the 2 flag pattern. We have one flag, bearish one, a big one, and another one was forming on March 26, and these were the targets that we outlined. And the oil went a little higher, and after that it just plunged. So far it is perfectly in the flag 2 target. For flag 1, well, I think it still has some room to go down. Now let's have a look at this particular call, which we talked about on April 2nd. After oil formed the top, we said, well, that's time to go here. And it's already surpassed the minimum flag target, and right now it is already breached through the upper boundary of the bigger target. And now it's up to update. We will talk about it in the weekly digest. And the next one, just to give you the perspective. So when we started talking about it, it was on January 20th when we made the original call, saying that there were so many similarities between the technical path of oil. This is Brent, by the way, technical path of Brent in year 2020 and right now. So many. And at some point I said that, well, it looks like we're gonna have this big candle sometime in March or in April, and this candle was representing a 30% loss in 1 week on March 2nd, March 6th of 2020. Well, that's so far it's close, very close. So the current candle represents just 15%, and I'm kind of curious whether this is just a warm-up exercise before the next week or it's a final one. Anyway, in any case, we are expecting oil to move lower, and whether it makes or drops 30% in the next week, it's still a question. However, that is still on the table. Well, and the target here would be somewhere between 40 and 20. The target remains the same. Now let's have a look at silver. And this amazing call that we made just a few days ago, this is the perspective for silver, how we outlined it, and right now it's already made a double distance for a double top, and it looks like so far it is moving further down. But let's have a look at the candles. This is how it started. Turn on this one. It was a 3 black crowns here, and this was like the first warning sign, and the second one was closure above the Bollinger Band, which we highlighted and saying that 75% of probability that that silver is moving down in the next couple of weeks. Well, that's happened. And the 10-day frame is closing on Tuesday. So far, it is on track for a big bearish engulfing. Now let's have a look at the Elliott Waves. So far, this is the wave that we left yesterday. I think that this is probably going to be the end of wave 3. Some point, potentially it could be wave C. And this would, not this one. So this would be end of wave 3. I would expect a consolidation here and another wave down here. That's potentially would form a very strong and big impulse. There is also a chance that this impulsive wave is down already completed. So if we consider this as wave 5, but I have some questions right now, and I would be looking for some technical signals which we'll receive only at the end of the day today and end of the week. So there is a possibility that this is wave 5, and we might see a bigger consolidation here. But tune in for our weekly update. We will discuss this possibility as well. And this is our bigger chart that we've been tracking since August. And right now, what we were talking about is possible closure here. So based on this wave structure and based on this wave character, I would say that this is wave 3. This is wave 3. The question is where it ends, whether it ends somewhere between 24 and 21, or it moves lower. It feels like it can have a much lower target, but we will discuss it later on. And remember our call on March 28 when we said that 34.11, there is a very good chance of moving down because of the ending diagonal here. Silver made a very, very dangerous overlap by invalidating this wave, and now it is moving down. And another beautiful call that we made and shared with our subscribers just on April 2nd. We said that the diagonal looks complete and the first move is done. Now we should expect SOV to move down, and this would be the target, 27 to 24. Well, as we are talking right now, it's already 26.7. Well, and this represents a 12% loss just after our call 2 days ago. Well, that definitely goes into our charts and our big library. So now let's move on to the next commodity, and this is copper. Another magnificent call. Just 2 days ago, on April 2nd, I shared this in the video and with our subscribers, saying that copper is not healthy and it looks like it is going to move down. Well, copper was 504 at the moment of this call. As we are talking right now, copper is 4.40, which is, well, 13% loss. And I would say, and this is something that I mentioned before, that 3.13 would be just a lucky target, the best case scenario for copper because of this ending diagonal. However, there is also a chance that the copper loses 64% and drops into below $2. This is the worst case scenario. Let's see how it plays in the next couple of weeks or months. All right, so that's about commodities. Let's move on to stock market. So what we are seeing here is SP 500, Nasdaq, Dow Jones, and Russell, all futures. So what I'm saying here is that this is the 8-day frame. Yesterday it closed with very strong bearish candles here, and also it made an 8x20 EMA bearish cross on the respective timeline. As you can see, well, the candle had an immediate effect, and the indexes already falling down. We also shared a little statistical piece of what to expect from these type of candles and what to expect from the technicals and what it can be compared to. If you're interested, you're welcome to investingangles.com and check that little statistical study. Now let's have a look at the technicals. Another technicals, this is the monthly frame. Nothing specific, no surprises here after Russell and Nasdaq formed monthly MACD bearish cross in March. S&P 500 and Dow Jones joined the pack, and right now everything is falling apart. This is an Elliott wave for S&P 500. This is an ending diagonal. Now we can say that this is an ending diagonal, non-overlapping ending diagonal, because so many signals were there, and this is something that we discussed earlier in March, almost a month ago, the perspective, and this is how it looked at the very beginning. We said in December 17 that this market is not healthy, so many overlaps, and this was just the first diagonal which completed. And now we are seeing that S&P is falling down, and it's almost hit the target level of 5120, which we were talking about a month ago. What else we are seeing here is this one. This is a breakdown of the wave that S&P forming so far. This is what we discussed just a week ago on March 31st, saying that there are two possibilities here, and in one move here S&P negated the blue count, and another move down it technically canceled the purple one. So the red one remains on the table, and it looks like it's the only one at this point. So far it is following nicely the target, and it's approaching our 5,000 target very soon. So the purple path is still sitting here, but I think it's mostly nominal because the probability of it is very low. And today is April. The next chart, this is Nasdaq. What is happening here? We call the double top at the beginning of March, on March 1st, and so far Nasdaq is executing very nicely. It hit a single distance, then formed a flag, and after the flag, it is approaching right now the flag target and the double distance for double top. Well, that's so far no surprises here, and we will discuss short-term and long-term perspectives in our weekly digest. Now let's move on to our stocks, and we will start with Microsoft. What Microsoft is doing right now is closing the week with a bearish candle. So far, the daily was trying to form a reversal candle, but it looks like it's not gonna happen. Let's see how it closes in 2 hours. So far, the weekly is on track for a bearish closure. The months of March closed with a bearish continuation candle, no surprises here, and the quarterly frame also closed with a confirmation of a top. So I would expect Microsoft to remain bearish for at least 1 quarter or longer. If we look at the classical patterns, Microsoft formed a head and shoulders, and it looks like this is the target 320, 305. This is something that we discussed way back in October, saying that Microsoft is not healthy. And by the way, this is Microsoft's favorite pattern, it looks like, because we have absolutely the same similar formation in year 2022, 2021, 2022, and it ended up losing Microsoft about 39%. So if we consider the same impact, we would be looking probably for this one, maybe a little lower than the classical target. So this would be 282, 280, this area. So far, it's on track, no complaints. If we look at the bigger picture for Microsoft, and I'm not sharing this frequently, this is the chance that Microsoft is completed the very large wave here, super cycle wave. And if it is the case, then we are looking for this target. This is the best case scenario for if it's wave 1 and 2. But if it's worst case scenario, would be looking between 235 and 180. That would be like 50 and 62% of decline for the cycle, for the super cycle wave. And now let's have a look at the shorter term. This is the call that we made on December 18, saying that Microsoft is likely done with its consolidation after the first impulse in July, when we started saying that Microsoft is in a bearish market. Now it is following it nicely, and after the call, Microsoft lost already 22+% and is moving further down. So the no changes so far to this outlook. And speaking about the technicals, Microsoft formed a bearish monthly MACD cross in November, and since then we said that Microsoft is done. Now this is a very simple estimate, so 285 it's our target by MACD statistics. Well, Microsoft is not encouraging. Let's see, maybe Tesla is. This is the chart that we shared with our subscribers back in February, saying that Tesla, when it was at 404 or 424 by this chart, we said that it has a chance to drop towards 260 and 200. In other words, lose about 50% of its capitalization. Well, not very many people believed, I would say mildly, but nevertheless, right now Tesla is in our target area. And speaking about the candles, I'm not seeing a very encouraging candle anywhere here. So the daily will be closing with bearish candle. The weekly is closing with a hammer, and it's breaking below the 200 and the 100 weeks moving average at the same time. And this was quite a week, by the way, because Tesla at the beginning it was at the very top, and I thought it was going to reverse, but now it lost four important lines: 20 weeks EMA, 50, 100, and 200 weeks moving averages. That's quite a move. On the monthly closure, Tesla just formed a continuation candle, bearish continuation candle. No surprises here. And speaking about the quarterly, this was a quarter of a bearish candle. It was an inside down, breaking below the very strong support line. And my brief estimate here is 140 is the next target. And just to give you the perspective, Tesla also formed on the weekly frame, on the quarterly frame, a MACD bearish cross, which is quite rare. Only 3 were made before. And if we measure an approximate target, so 45% drop after the cross would be a normal condition, I would say. Normal expectations, 140, 45% of the most recent price after the closure. Let's see how Tesla works with these technical signals. Speaking about the short-term chart, no surprises here at all. Something that we outlined back in January, saying that Tesla has a very beautiful path here, and it has been following it nicely, staying within the channel and hitting all the targets on the way. So far, Tesla tried to form an impulsive wave, but unfortunately it failed, and right now this wave is corrective, and I would be looking for another move down towards this 5, and this would be aligned with our targets that were estimated by different methods. And this is another famous chart that we made for Tesla in January, saying that Tesla has a potential to drop down towards 240, 138. And guess why? Because this was a diagonal. This was an ending diagonal, an expanding ending diagonal for Tesla. And we know that when the diagonal is formed, it tends to return to the level of origin, which is 138.80, or we round it to 140. Let's see how it reaches there and how many weeks it would require. That's all for Tesla, and now let's have a look down under. ASX. ASX closed the week with very strong bearish candle, breaking through 100 and 200 weeks moving averages. However, it went into an oversold territory, and I think we need to expect a bounce here, at least a short-term one. The daily closed with a bearish candle, and the month of March was also closed with a strong bearish candle. Right now we are seeing the consequences of it. It looks like that the chart that we shared last month, we said that this is a very interesting pattern. I'm not seeing it anywhere but in Australia. Well, it looks like it's a favorite one, and after that we are expecting a move down. Let's see how far would it go. Speaking about Elliott Waves, this was our call when the index was 8,300, and it was in February, at the end of February. We're saying that ASX potentially formed an ending diagonal, and it's not just an ending diagonal, it's a double ending diagonal, because we have the second one here, small one, and the return to 63.74 is just a matter of time, and it looks like the ASX obeys very nicely. Now let's move on to the next chapter of our discussion here, and this is Ethereum in the crypto world. This is a thumbnail that I prepared for our Halloween party and for our Halloween update, but it looks like it is still conforming, so I decided to put it here. let's talk about Ethereum. So what we're seeing is that the coin is closing the day and week and months with very bearish candles. So last week was a technically bearish engulfing, and we are looking for lower low today, lower low this week. No surprises here. The monthly is falling, and the freshly made 8x20 MA bearish cross and the freshly made a couple of months ago MACD bearish cross, they just signify the bearish odds and the chances for moving lower. If we look at the 3 months closure, the quarterly one, it was extreme bearish and it formed the tower top here, and the expectations for moving lower are just plain high. If we look at the monthly frame, this is another perspective. We have a MACD cross, which is somewhat similar to the previous two on the monthly frame, and the previous ones, the previous month lost Ethereum about 93% and 68%, so the average is about 80. If we look at the 80% drop here, then the Ethereum would be somewhat around 800. So this drop would be totally normal. And speaking about Elliott Waves, this is the chart that we've been discussing for a while. No changes here. So this is technically since March. We started looking for it in March 2024, and now in February, updated in February 2025. So no changes here. The target is still 920 to 95, double-digit prices, as we said. And this would represent a 97% drop to the maximum of the most recent top. No changes here. And speaking about the shorter term, Elliott Wave, on February 11, we completed this chart. So far, Ethereum is moving nicely. And at this point, I'm not sure whether it completed wave 3 or not. There is a chance that this is still wave 3, and after that we might see a consolidation for a couple of months before the final wave moves down. So, just to wrap it up, from oil's precision drop to silver's technical unravel, copper's nosedive to Ethereum's next steps, today's moves weren't just noise, they were a confirmation. Microsoft is finally reacting as forecasted months ago, and Tesla's crossroads could define the next trend. SX reminds us that down under doesn't mean an opposite market. So what's your biggest setup this week? Are you tracking the move or trailing the noise? Drop your thoughts in the comments. Let's trade ideas. Massive thanks to all our 12,000 plus subscribers. Your trust drives everything we chart. We are seeing a surge in bell notifications, and for good reason. For full Elliott Wave, multi-frame candlestick analysis, and real-time edge, subscribe at investingangles.com. And if you are ready to level up, join our private Discord with Master Trader Kyle and Swing Trade Pro David. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.